Alright, everybody, welcome back. It is Thursday, November 9th, 2023, and we're at precisealgorithmtrading.com. Let's dive right in here and look at our trading systems and how the markets did today. So, this is our automated trading system, the results. This is our equity curve. And so, after a trade happens, let's I'm going to draw a picture just because I haven't done this in a while. Um, so let's act like a trade did that, and you got long. And I wish this thing would work the way I want it to, but anyway, like you got in at the bottom and you got out at the top. Well, and you're, and literally that's what happened in your trade. Then, and that's a was a win. Well, that comes in here on this graph as a little line up. So if the trade, let's act like you were trying to want it to go from here to here, but it ended up going up a little and then down and got stopped out down here, that would have been a loss, and that would show up as a little down line right there. And so this is the culmination of wins and losses, and this is since, oops, covered that up, since 5.8. So that's 5.8 to 11.9. I think that's 6 months worth of data, because that's that's how I have it set up. You can pull up as much data as you want, but this happens to be it's right off of our trading system and how much data it's looking back. Um, so if you look back at more data, it takes longer to execute. So I open those up on the weekends and we take a look at that. So on the weekends, our equity curve pretty much looks like this. It's got a few humps and bumps in the middle like this, but it's going from lower left to upper right. This is too. I mean, lower left is here. We went down, then we went up and sideways. But the idea here is to go up from here. And so, yeah. I hope that makes sense. And let's keep going. That was the Dow futures, the YM contract, and we don't make that up. Those are the symbols and the instruments that are available to trade. It's just one of them. Anyways, this is the wins and losses of the day. So today's the 9th, and you can see literally we had a win of 960 bucks, of another win of 1540, a loss of 1460, a win of 300, a loss of 500, and a loss of 20 bucks. So I think all in there, yeah. So the 1500 and the 1400 pretty much negate each other, and then you add the 960 and the 300, 1260 minus 500 minus 20, and that is a net win for the day, which again doesn't really matter, but that literally is somewhere in that little peak right there of all those trades we just looked at. None of it matters because all we're looking at is the all in, and it's a long game. This is not a get rich quick scheme. Although it is a fast way to make money and a fast way to lose it if you just really look at the individual trades. All right, this is our RTY, which is the Russell futures, and same time frame. And it looks like we had one negative trade today. This pop happened a week or two ago, and that's what we're really sitting around waiting for, is those types of pops. And so that was back here on 10/6, so it's getting to be a month ago. Um, and then this is today's trade. This one doesn't trade near as often. And then the NASDAQ, which I've been waiting for something like this. If you notice right here, I'm going to draw another picture because it's worth doing. If you connected all these lines down, this is it looks like a channel. So we broke that channel today to back to the upside. So these they're not stock charts, but that that happens in stock charts. So your equity curve can sort of give you signals ahead. Now, doesn't mean you couldn't get one of these and go right back down again, but it is constructive back to the upside. And this is today's trading, which we mentioned this yesterday. This thing, I think, traded 13 times today, if I counted right. Yesterday, so we had some negative trades in the last few days, or yesterday, and um, but we had that nice $2,300 trade at the end of the day, and so I was kind of hoping for some like a run of wins, and then we got a run of losses today, and it's actually in some ways I don't even try to pay attention during the day. I like to make sure that the system's working and on, but this stuff can drive you nuts if you pay too much attention to it. That's why it's automated. And but then so we did get a run of losses, but they're all relatively. I mean, they're not as like 1,600. It's That's a big deal, but it's not as big as this 2385 win, and this 2250 is obviously a big deal, but it's still not as big as the 2385 win. And then you get a run of these, which has a $4,500 win in it. So I said it the other day, and I've said it before. This is kind of like a casino, and it's like you have bettors that are taking your money, and then all of a sudden the house starts to win because the odds are in our favor, and it's set up that way. You can't guarantee the math, but and I certainly can't guarantee when these drops are going to happen like this, or even like the one that we're experiencing now. Um, but the math in the long run, that's why on the weekends I open up 12 months worth of data or even 15 months, and we look at it kind of net net, because inside of that 15 months, it's hard to say that, especially when you're this is a 1,000 tick trade, so every 1,000 trades, actually each tick is a trade, so it's like one transaction, and every 1,000 of those makes a bar, and that's instead of using 1 minute bars or 5 minute bars or whatever, like a lot of the ways that some people trade. And actually our Dow futures do use a 1 minute bar, but instead of that we use ticks. And so anyways, my point is, inside of 15 months worth of 1,000 tick bars, I think you see just about every market possibility that could happen. You see Fed Day, you see holidays, you see everything, and that is the theory behind this trading system. So, all right, that's enough of that. Let's move to the markets, and let's look at the SPX. So we've been waiting for a pullback to these moving averages, and actually over here, this is the hourly chart, and if I it got way longer than expected, but in fact it's this pivot down here to either, it's really the high of these two bars. So now I'm expecting to go back to about the 50% level of that, and I could draw it on here, and for the sake of education, since that's really what we're doing here, I will do it. So we'll click down here at the bottom, we'll click up there at the top, and that is the 50% line. So that is where I'm expecting price to possibly get to. I think that's a little deep for this move, but just because the bullish percent indexes are on the right side of everything, and the healing is kind of in, it seems like, for the markets, but the potential's there for the S&P to go this far down. And then also, let's look at this thing. So we've crossed back to the upside on these moving averages. We're above the we're on the upper side of the average true ranges. These are Keltner channels put together, so it's a 1, 2, and 3 standard deviation. And you can see we're getting a reaction off of the second Keltner channel. The question is when we come back here into the mean, are we going to get that bounce that we tend to expect? Sometimes you can cut through it, like here. Of course, this one went down after that. But if you go back here, we bounce up through it, we pull back to it. It'd be interesting to, well, yeah, I guess from here to here is the 50% line. I'm guessing we did hit those on the way down and up, but I'd have to do the actual drawings on here to figure that out. So, anyways, point being is, I'm expecting it to at least come down into these green lines right here and back into the middle of the two purple lines, somewhere in that neck of the woods before we bounce. Although, check this out. I did see this earlier, where we had a down day like that. Now that's above the 2 ATR, and then we went rallied for a while before we really pulled back. Could we get something like that, pull down a little bit, and then rally and maybe get up to the 3 ATR line? Is possible. Anyways, that's the SPX. The Dow went down quite a bit today, but again, it's totally what we were expecting, and we've broken the ATR trail over here on the hourly chart, and so we'll see where we go from here. But again, expecting this thing to pull back into this zone before we move back out. And by the way, you can see that over happening on the hourly chart as it's starting to happen for the daily, because you have to have it happen on the inside of the market, or the hourly chart, the 15-minute chart, therefore the intraday charts, before it can really show up on the daily anyway. The Russell today took a pretty big hit, but again, all the signs are we should be bouncing out of this zone. So let's go ahead and do that drawing here to here, and we've pulled back 50% on that. So now we're going to be looking for it really to break up through that line, and I'm going to be literally looking for something like that to possibly, and if we did that, you'd break the ATR trail to the upside, and we'd start to see potential for a rally out of this. That's where I'd be starting to look for some on the IWM, which is an ETF for the Russell. Where we start to rally up out of this zone. In fact, that is no good anymore, so let's go draw that back in to there, and I'm going to put an alert there. Create alert at or above. Now that'll go off. I'll actually get an alert on my phone even when that goes, and if that gets up past that, there's a good chance it's going to break this ATR trail back to the upside. Okay, that was the Russell. The NASDAQ, a similar look, and really, again, I'm going to go ahead and do the math. That seems like a pretty deep pullback. Not that it can't happen, but we'll see what happens out of here. So, alright, let's move over to the transports. And I'm just going to use IYT. It looks an awful lot like, well, it looks a little bit better than the Russell 2000, but similar kind of a look. And again, potential for a rally out of here, which might sound crazy after a day like today, where you're looking at the Dow being down 220, the Russell being down 1.57%, the NASDAQ being down almost a percent. But I mean, that's exactly, the markets are counterintuitive. So that's when I start to look for reasons to get long. And let's look at oil. Oil put in a doji at the bottom here today. Big high wave candle that pretty much opened and closed at the same spot. And it's going sideways into tomorrow. We got I think officially we close back inside the Bollinger Bands. So that is a potential like trading idea in and of itself. Not that I would suggest doing it. In fact, the USO the USO ETF did not put in that signal, and but we are starting to see some potential like new pivots to break higher. I mean, that kind of confirmation would be something to look for over here on the hourly chart. Break above that pivot for a new potential, even short-term rally. Alright, that's oil, and that's enough for that. Let's go to stockcharts.com and wrap this up and look at the bullish percent indexes. The industrials tacked on 2 new X's today in a market that looked like that. So that means that 5.88% of stocks in the 5.88% of the stocks in the industrials turned into point and figure buy signals. So that means that now we have 60% of the stocks in the Dow Jones Industrials, which there's 30 of them. So 60% of those are in a point and figure buy signal. And what's that mean? That just means that's a measure of bullishness, or bearishness would be the inverse. The NYA, a lot more stocks. I don't know how many are in there, 7 or 8,000 I think, but they went up by 0.56% today. 39.86% of the stocks in that index are on a point and figure buy signal. The transports didn't move today. The NASDAQ down by 0.1% or hardly anything. It wouldn't surprise me if we got a rally tomorrow. I would expect some initial weakness, but then unless we get a gap higher for some reason, I'm not sure what what all's on the docket for tomorrow. Doesn't really matter. The the S&P 500 tacked on a new X today, went up by 2.2%, and 46.4% of stocks in the S&P 500 are on a point and figure buy signal. The OEX, the S&P 100, went up by 2.08%, and the NDX didn't move. So there's some bullishness underlying this market, and at least that's what I see in those charts we just went through. So that's exactly the reason why I'm looking for reasons to be a buyer right now. So with that, I will leave you guys for the night, and we will catch you again on the weekend review. Good luck tomorrow trading, and we'll take care.